Now moving to section 4, which is foreign assets. So foreign assets, just like we talked about foreign liabilities, this is about foreign assets. Like any company has made any overseas direct investment, we have to mention in section 4. So this is again divided on the basis of 10% or more equity holding or 10% or less equity holdings. The major details are same, like if you have equity and participating preference shares, or if you have other capital disinvestments made during the year. The additional part in case of 10% or more equity holding is because that has become a substantial investment now. So RBI wants to know, okay, you have what is your actual net worth in those companies. So in case of companies, in case of foreign liabilities, in section 2, details about companies, sales, purchase, number of employees, reserves, etc. is mentioned. In case of ODI, the same information is required only in case of direct investment enterprises, like the companies in which your reporting company has made investment. Details of reserve, surplus, sales, purchase, etc. of that company only. So you need to mention how many direct investment enterprises you have in which you are holding 10% or more equity holding, month and year ODI made first time by your company, and then you have to mention entity-wise information. So this information, total equity of DI and equity held by Indian reporting company, reserves and surplus and net worth of each DII, total sales and purchases, number of employees on payroll, etc. on the basis of each DII. Then you have to mention equity and participating preference share capital your company is holding in that DII. Other capital similar to what we discussed in section 3. And disinvestments, again, if you have disinvested in any of your DII, you'll have to mention this during the year. Second is less than 10% equity holding. So that information about reserve, surplus, etc. is not required to be mentioned, but we need to mention how many equity and participating preference share capital we are holding, and other capital in the form of non-participating preference shares, lending, borrowing, etc. we are having. And in this case, again, the country-wise consolidated information has to be mentioned. So a little bit easier than the companies in which we have 10% or more equity holding. We face challenge here also because companies, the outside countries generally have January to December as their financial year. So asking them to provide information on the basis of 31st March again is a tedious task. So therefore we need to start early. Third is again portfolio investment. This is again country-wise consolidated information which we need to mention here. We need to mention in how many countries your company is having portfolio investments in the form of equity securities. Like for example, you've invested in the shares of Apple, Google, etc. You'll have to mention here. Debt securities, if you have purchased any money market instruments, bonds, of overseas entities or any government bodies, or you are having any non-participating preference shares and debentures in any entities where you do not hold any ODI, you've taken it through portfolio investment, or you've taken it, you have non-participating preference shares or debentures, etc. in those entities. And any disinvestments made during the year under the portfolio investment scheme also you need to mention here. Other investments with foreign unrelated parties similar to section 3, if you have any trade credit. So in section 3, we talked about outstanding liabilities. Here we'll have outstanding claims because this section talks about foreign assets. If you have any claims with foreign unrelated parties in the form of trade credit, loans, currencies, deposit, other payable accounts. So suppose, if I have any ODI in, let's say in one of the DI with 10% or more holding, so then I would need to file FLA, right? Assuming I don't have any FDI. So do I need to fill in any information in any of the previous section is the question which generally arises, because I only have ODI in one of the entities. So, FLA requirement triggers because of section 4. But it is very important to note that we will still have to mention if we have any other outstanding liabilities, we'll have to mention in point number 4 of section 3 also. While we have ODI, we might have our liabilities to the overseas parties also. Point number 4 of section 4 talks about outstanding claims. In case we have outstanding liabilities, we'll have to mention those in section 3, which generally people miss to enter. In the Excel regime, these points were clubbed in the same section, outstanding claims and liabilities. So in case we have any claims or in case we have any liabilities, those were required to be filled in the same section. However, in the online sections, these have been segregated. So there is a chance to miss those. So I therefore wanted to highlight that. Now this is all about section 4.
Welcome to Complinity Technologies. Complinity is India's leading governance, risk and compliance software helping companies to manage their compliance, contracts, litigation, legal updates, inter-financial controls and more. Complinity is a one-stop shop for all GRC needs. With our proprietary 12 GRC modules and real-time legal updates on 2,000+ laws and 24,000+ compliances. All in an integrated platform that is easy to use with automated alerts and risk management capabilities. Is why compliance managers, general counsels and chief financial officers choose Complinity every time. Join the most innovative and prestigious brands that use Complinity. Automating your compliance management, request a demo at complinity.com.